Hey everyone, I wanted to just take a few moments out to share some information just so everybody understands. There's been a lot of changes with One Big Beautiful Bill Act. Whether you like them or hate them, or it's a mixed bag for you, I understand. But this is just useful, especially for people who do merchant card transactions. And this is just to provide clarity. Some of this you may know, some of it you may not. Um, because it was something I wanted to look into and discover finer points on where the thresholds are and what qualifies as reportable and non-reportable on a 1099K that merchants have typically been required to present. Now, in the last couple of years in the previous administration, the um, requirement was reduced greatly, first to 5,000 or more plus a certain number of transactions, or 5,000 or more in total. And then in 2025, it was supposed to be 2,500 or more in transactions that are that fall under a certain classification with merchant and other service providers like Facebook, Venmo. Um, you get the idea. That kind of group. You were looking at having to report much earlier. Previously, it was $20,000 or 200 transactions. So typically, in my experience, prior to the changes under the Biden administration, if I didn't do $20,000 in merchant transactions or more in any particular account, uh, or it was more than 20,000, but I had less than 200 transactions, typically I wouldn't get a 1099K. It's just the way it was. Did I report? Yes, because I was trying to show it. I was trying to show revenue, not necessarily taxable income, but revenue. I had expenses. There were merchant fees, of course. But actually, you should see up here where I was just going through Google's AI, and you'll look at with the recent passage, the 1099Ks, we go back to the 20,200, but there's a caveat, and that is, as I go down, you'll see that the types of transactions that are that meet that 20,000 and $20,000 gross and 200 transactions or more aren't the same. It's not like I had experienced in the past. So the reality is, and I'll come down to this, there's a lot of information about essentially this being retroactive to 2022. So where, I'll just cut to the chase, where is the difference? And as I dug down, I asked the question, how does the law affect the IRS's ability to track online transactions? That was something that it said. Oh, what qualifies as a payment card transaction in the above question, and can you provide at least three examples? So I clearly understand. Of course, I misspelled clearly. We'll ignore that for a minute. Um, and the reality is, what is the difference between those transactions? So merchant card transactions are going to be things like, you're running a business, and those are outside the scope of that limitation. So any merchant card transactions that are business oriented are still reportable. Even if it's a negligible amount, they're still going to be reporting to the government. The difference, the ones that fall under the 20,200 rule, you're going to be looking at personal transactions, and it could be through platforms like Venmo, it could be Zelle, it could be Facebook, and like the Facebook Marketplace, eBay, that sort of thing, and what types of items actually require or are exempt. So examples of payment card transactions that are not that are exempt from the 2,000 or the 20,200 rule. You're looking at retail sale in a physical store, an e-commerce purchase, whether it's on or offline, or gift card payments. You have to so if somebody pays you with a gift card, typically you're going to be reporting it. However, I asked the question, so give me three examples of what transactions otherwise reported on a 1099K are not reportable under the 20,000 and 200 transaction thresholds. So, reimbursement for personal expenses, selling personal items at a loss. So, if you're selling stuff on eBay or Amazon or whatever, if you're selling it just to get rid of it, like I would suggest thinking of it as an online yard sale, then it's not it's they're not required to report that. However, there can be things depending on your patterns. Oh yeah, and monetary gifts from friends and family. Um, they don't have to report that. However, um, income can still be taxable, and this is what it's saying here, even if you don't receive a 1099-K. But the interesting thing that I'm trying to point out is that the reporting, even though it might be one of the three transactions that are not required to be reported at the 20,200 thresholds, they may accidentally be reported anyway, and so it's up to you to go in. There will be a form where you can enter the difference and subtract out personal payments and whatnot. But that means you're going to have to actually look at your transactions. You're going to have to log them during the year and focus on differentiating them, the types of transactions, personally versus business, if you happen to have a side hustle. This is going to be more and more important because these things are subject to audit. And even though the government historically has said, oh, under 400,000, we're not going to worry about it. Well, this is commerce, and commerce actually raises the bar on when they're going, or, well, I guess it lowers the bar on when they're going to start looking into things, because there are things like Social Security tags and other social benefits, as well as just the government sticking its hand out wanting your money, where you're going to have the backup if they ask. So, food for thought. Go ahead and comment. Give me some feedback. Again, this is just off the cuff on a Saturday, hanging out at home. So enjoy. And hopefully, if you have any follow-up questions, KeithStoller.com. You can go ahead and reach out there, and you're welcome to comment below. Take care.